From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Ritual coming to you live from London. It's just gone a couple of minutes past midday, which is UTC. How is everybody doing today? A big shout out to everybody that's making the stream live, and also a big shout out to everybody that's going to be watching this on recording. I hope everybody had a really, really awesome Christmas or festive period. If you don't celebrate Christmas, it's always nice to get a little bit of downtime with the family. We see lovely Erica popping up in the chats. How are you doing? Hope you had an awesome Christmas, bit of time with family and a little bit of time to reset as well. Oh, Kelly, there she is. Our lovely Kelly Barker all the way from New Zealand. Funny enough, Kelly had some neighbours of ours have their family over at the moment, and they're from New Zealand. So we're having a good little bit of banter with them, and got to catch up with my friend from Oz as well. Trader Mum Joe as well. Welcome. Guys, really brilliant to have you on the stream. I know it's Wednesday, so we didn't get our show on Monday, obviously being Christmas. So today, I wanted to kind of hand over to you guys really and see what it is you would like to cover, whether you'd like to look at some alts that could be about to pop off. Obviously, we've had a nice little kind of recovery here from Bitcoin. We've got a few alts kind of lagging behind. We've got a few that have really kind of had a little bit of a rip. Audio too low. Oh, okay, good question. Amin, is there an issue audio-wise for everybody else, guys? I'm not sure if it's that, or it might be on YouTube or Twitter where you're watching it. Amin, might be that the audio has been capped on that. So maybe check that that's turned up, unless people do let me know if there is any issue with the audio. Off work for 2 weeks, Kelly. Audio's fine. No, fine. Okay, perfect. Yeah, sorry. I mean, it might just be that the audio's been kind of auto set lower on YouTube or Twitter, whichever medium you're watching through. Off work for 2 weeks, Kelly, over the holiday period. Stay awake, skip the sleeping pills tonight. You legend. What an absolute trooper. So, look, we're on Bitcoin at the moment. Let's start by me giving you my thoughts on where we currently are. Yeah? So I'm going to pop out, first of all, to a 4 hour, which typically for crypto I use a lot more to frame my bias, right? So let me just give a little bit of context here. So on a Sunday night, I do the Bitcoin report, and this is what's been left up from that Bitcoin report, right? So yes, Erica, absolutely great reminder as always has my back. There we go. So let me just turn off the session breaks just for a second. These are basically just the day dividers that we get. You can get access to them through your settings on TradingView, and then just go on your events tab, and then you'll see these big vertical lines down the screen disappear. So the plan was really, really simple, okay? And that's just looking at where price is moving from, or where it's delivering from, okay? That's one of the key things that I look for in price. The two kind of core elements that I always want to focus on is, has price taken a high or swept a low? And if it has, the chances are we're moving from external to internal liquidity, right? So, for example, we see that this here is actually also a fair value gap where we take a high, as we did over here. Yeah. So we can see we've taken that high. We can see this fair value gap that exists below. So where we've taken this is external liquidity. Our theory is then the price moves to internal liquidity before moving back to external in the shape of that high. Okay, we're then overlaying that, or I'm then overlaying that with the thought on where price is delivering from. All right. I mean, yeah, sure, we can take a look at that at the end. What can you just... Bittensaw, can you just let me know what the ticker is for that, please? So, like, BTC, USDT, for example, and I'll take a look at that for sure. So here, for me, as I just pump out to the daily for a second, for more upside, I wanted to see a change in the state of delivery, right? Meaning that, as we see here, TAO, no problem. Let's have a look. TAO. Perfect. So as we see here, a change in the state of delivery is where we're looking at our down close candles to be closed above, right? Or our up close candles to be closed below. So a prime example of that here is, see this, if by the way we have consecutive candles, then you want to make an allowance for all of them. This down close candle here, right? Let's just do this as our CISD. Don't want to get lazy. Actually, we'll just draw it in. And we'll do that in blue as well, so that changes from our structure break lines. So you see this up close candle here closes above this. Now, the theory is that if we're doing that, then price is looking to change its state of delivery. So we're looking to target the next resting liquidity, which in this case would be this higher, right? So this candle closes above. What we're then doing is we're then looking for the start of this candle to give us some trades that move higher, in which case then you're going to look to cycle through your time frames. This is just to give just a little bit of an example, all right, guys? I'm not going to get kind of too bogged down on this at the moment, but here we can see we have the green arrow signaling that we've had the daily close above the bearish candle, meaning the state of delivery has changed. What we're then looking for is for price to draw back, because if we want to go long, right, there's a couple of things we want to do, and this is really the importance of that state of delivery. So we want to see price draw back and then give us a reason to go long, right? So as we get this pullback on price, we want to see price delivering from a bullish fair value gap. So let me just do that in green, just so it stands out for anybody that maybe hasn't been through this before, right? So price is now pulling back, right? Seems counterintuitive, but this change in state of delivery on the higher time frame lets us know that we're favoring bullish trade setups. So then from here, you can look to take quite a simple trade entry method, like you can close above this. I used to call it a breaker line. Just you'll see it on some of my older charts depicted as this, right, which is the dotted red line. We can see here that we close above with displacement, meaning that we have a strong move higher, yeah? Then you can use something like this, where you can take the 50% of this candle for your entry. Because it's a strong full body candle, we expect a little bit of a pullback. We can see that we get that there. Stops go below the price swing low. We'd ultimately target the liquidity resting here, but we've got our black line. Remember, we take our target from the higher time frame. And then if we're also using our standard deviations, which we can see here, 0.5, 1, 2, 2.5, and 4, we can see how it came into that nice 4 before it ever really gave us any reason to get out of the trade. And we get ourselves a nice 3R trade, okay? Now, this will all be recorded, guys. So I know I've gone through that quite quickly, but I'm also conscious there's a lot of people on the stream who hear me go on about this pretty much every week, right? So I'm not looking to focus so much on our entry techniques today. I wanted to kind of look more at the bigger picture, right? Which is moving out, using our higher time frames to frame our trades. So the reason also that I want to go through that is to give you my reasoning behind my analysis on the Bitcoin report, right? So let me just tidy this up. So this is an order block on the daily, right? We also have an overlying fair value gap here on the 4 hour. So as we can see, when price comes down, when we're asking where price is delivering from, when price is engaging here with this daily order block, it's delivering from the daily order block. Now, if we bring in a secondary time frame, in this case the 4 hour, we can also see that price is delivering from this 4 hour fair value gap, right? So let's just draw that in. And we can see when price is coming into here. Now, when we enter and when we bring in our third time frame, right, our execution time frame, this can be your 15-minute, it can be your 5-minute. We can see again, when price comes into our key area of interest here, we're looking for the reaction. Ultimately, this happens outside of our kill zones, right? So London, New York AM, and New York PM, right? And you can see the price action's a little bit flat. That's often because Asia consolidates, right? So this would be our Asia range in here, which I can show you if I flick this on. Right, so the Asia range is the red box. We can see the consolidation in here, and then price gears up, draws down in the London session, and ultimately pops here in New York. Right, so that's the principle of what we're looking at. So for me, when I was discussing this on Sunday, that's why I wanted to see prices daily close above this, the change in state of delivery. And we didn't get that, right? We also didn't get it on a daily scale, right? On a 4-hour scale, sorry, right? We still kept this intact. So while price closes below this, which we got here, then I said I expect price to draw down into this order block. This is where we're delivering from. So here, Tuesday, we were favoring long setups. Now, long setups going to the moon? Absolutely not. We just don't know where it's going to there. All we can do is target our next point, which is here. So this is our bearish fair value gap, which I'll just do in red just for people that might be new here, meaning that while price is in here, we're expecting price to draw lower. What we want to see with this is we want to see price close above this with a nice bullish candle, in which case then I can start targeting liquidity resting above these equal highs here, right? And we also have this liquidity resting here, right? So then on a lower time frame, I can get myself into the charts and I can look in here for some kind of entry method, right? Let me just have a quick look through the questions. Do I have my mask on? Do you know what? I don't at the moment. I still really want to find one that I can see through, Erica. So then when I'm going to get my office, I'm going to get my office redone soon. I said to myself in January, that was it. New Mac, treated myself to a nice new desk before Christmas. But I said, no, I'm going to get a new Mac. It's about time. This one's about 3-4 years old now. So it's just really starting to just slow down a little bit, as you guys will know from some of the freezing. And then I'm going to get the camera and that set up as well. So I think I'm going to start using that mask a little bit more on stream. So for those that don't know, you can probably see it on my Twitter. Or certainly in the Bird Nest chat I got a Pepe meme eye mask for Christmas, and it's hilarious. You should try seeing it on the dog. It's absolutely brilliant. And Kelly, good. Okay, good to know it doesn't get boring. So. If we're saying at the moment the price is delivering from here, right? We've got a bearish fair value gap, and we have this, which is really importantly, right, our balanced price range. Why is it a balanced price range? Because you see this bullish fair value gap here. Price kind of respects it here, a little close below, but okay, fine, it's crypto. You can allow for a little bit of extra volatility. Then comes back above, so showing bullish intent here before closing below. That's why I said we close below this. The expectation is for price to draw deeper into this. Now, did also say that we'd be looking at this in terms of the equilibrium, right? So we'll take this as the order block. And you can see here, price dips a little bit below it, right? But ultimately respects the 50% of this daily order block. So where we stand at the moment, for me, is really, really simple. We are delivering bearishly. When we look at the 4-hour, we've got a lower low, a lower high, a lower low. Now, I know people want to be really bullish at the moment, and it's hard not to be considering the current market conditions. But if I want to kind of take any trades, especially basing my higher time frame around the 4-hour, then I need to see price close above this. If not, then this area for me, and we're not in it at the moment, but this area here looks highly likely for a rejection, because we're delivering from a bearish fair value gap. How we can trade that is we're outside of our session time at the moment, but if we were within it, something you'll see me trade a lot, as I did with this long setup down here, is waiting for resistance to become support, basically, right? So in this case, we're using a fair value gap here. We can see it rejects price. We then close above it, holding it. I just unlock that for a second. Right, we can see how key this becomes, right? Bearish fair value gap, close through with a bullish fair value gap, becoming a balanced price range. We just kind of sneak it in here. and then we see this area become support, right? So then when we were in our New York PM session yesterday, we can wait for price to draw into here, and then we can look for long setups taking price higher. All right, so that's the theory. So let's overlay that on, and what was it Amin wanted to say? TAO, wasn't it? Here we go, BitSense USDT. So TAO, I don't think we have a perpetual contract. No, okay, so it's a spot asset, no problem. Let's take a look on KuCoin, shall we? Don't think I would have charted this one up yet. So we'll go. Let's do a nice. Let's do a nice top down, shall we? Now this is a spot asset, right? So we need to understand that these charts look different, and the asset will trade differently if you're on a perpetuals contract or you're looking at spot, right? So your perpetual contracts are your futures contracts, right? So that's where you're betting on where price is basically going to go, versus spot contracts when obviously you're kind of buying and actually have ownership of the asset. So for these ones, it can pay dividends, obviously, to get a decent high time frame view. Now, obviously, we don't have a lot of information here, right? But what we do have, if we're looking again at our change in state of delivery, we can see here that, if I just draw this up in blue, right, that the close below this here on a daily scale, yeah, was the idea that we're then going to see more weakness because we violated the bottom of this, we've closed below. So we would have been looking for short setups here. Excuse me. In the same vein, these consecutive down close candles here, if today's candle closes above this, then the likelihood is for me that price is going to kind of start to push higher, okay? So we don't know if that's going to happen just yet. But we can see in here, we just dropped this down to a 4 hour. And now we can see here, we got this little gap, right? Now these are really interesting, these gaps. So same with fair value gaps. This is actually a volume gap, right? But you can see here, this becomes value when this candle closes. And then look how we were talking earlier about price going from external to internal liquidity, right? So we take a high here. So we've taken external liquidity. Now price retraces down here to find internal liquidity, which is our fair value gap, before ultimately moving higher and then targeting the next resting liquidity. So with that being our theory, although we have taken this, which is also a high to consider, Grandmaster Pikachu. Awesome. Never realised you're an ICT style champion. Yeah, so I studied under Michael a lot of years, many years back, and his original mentorship. Very, very fortunate to learn a lot from him. But I've studied under a lot of other people. Like SC was a huge influence in my trading style and life as well. So I'm not what you would necessarily call an ICT purist. But I think that in terms of price action, he really is the master. In terms of the way that people read price and movement and have an understanding of it, I think SZ is probably the king in terms of price action like that. But I think Michael was probably the biggest influence in my trading. But realistically, I'm kind of really a liquidity trader. So there's a lot of other people you can look at in the space as well who are really, really exceptional at that exponent. But really, it's conceptualizing the way that larger investors, institutions, major players are going to be looking to move assets around. And for me, it's always really made sense that, you're targeting these old highs and lows. You're looking to generate liquidity, right? By driving price up to some of these levels, what you're doing is you're creating these big key areas of liquidity that major players can fill. Market makers have an efficient market, so everybody's happy because they can induce the larger players to play. And that's always kind of worked quite well for me. It just keeps things quite simple. I'm quite a simple creature. Brilliant. Okay, nice. Yeah, and I always say to everybody that with this kind of teaching, I'll tell you how I use the I'll tell you how I use the information. Excuse me. But I always recommend going to the creator of the content, right? And that would be ICT. He's got a 2022 mentorship. He's got the original mentorship as well. There's some other people. What I would say is there's some brilliant people on there that break the information down. But I really, really would spend the time to actually go through his actual direct content. I know a lot of people out there say he's like, he's a scam, he's this, he's that. But I know a lot of people that have built really successful systems around him, but you still need to understand the underlying market movements and data, right? You're not going to kind of just find a go-to setup that you can trade every kind of day. You still need to have an understanding of market dynamics, which is hopefully what I try and kind of share on here a little bit. So in terms of the theory from this, we've taken this liquidity here, external liquidity, because it's a high, right? As we did here, we see price drawing down to the low. However, we kind of have this high here as well. So right now, it's a little bit unclear because price could still move up to take this. We also see, if we look left, that price is currently also engaging with this order block. So if we're bearish, we want to see the up close candles suppressing price, as we see here, rejection, rejection, rejection. So any sign of strength within here and price trying to push up further, then yeah, we could still get rejected here again. But ultimately, we've had some really key rejections at this point already. So price could easily be looking to now come after this liquidity. If not, and we get some rejections and we get some breakdowns in here, then that's when we can then look to target lower. So here we can see again on the spot asset, you can see a lot of buying coming in here, right? A lot of absorption. Price delivering where? From this bullish fair value gap, which I'll do again in green. So we can see price did what? Took out a high here, came down, rebalanced this, now pushed towards this high here. So how can we now decant that and say, okay, well, what can we do with that information, right? How do we know if we're going to see strength or if we're going to see weakness here? Well, what we can do is we can look for confirmation, okay? Confirmation can come in a few different styles, but again, if we focus on the state of delivery, we're delivering from a higher time frame bullish fair value gap here. We can see the other fair value gaps. So we can see the reaction that was met at this one here. Then we can say, okay, well, we want some conviction to see if we're going to go higher, right? You can base this on market structure breaks. You can again base this on the point of delivery. But something I always like looking for is inducement, meaning that we see some kind of sweep. Then we want to see, if this case, if we're looking for price to move higher, as we did here when we took out this higher, we were saying, okay, we want to see price rebalance and then make a move towards this higher. So we want triggers, or we want some indication that we're going to get one or the other. So here we get this reaction. We then get this lovely bullish break here, which has displacement. It then leaves us this fair value gap, right? And it also leaves us this untapped higher. So now we're saying to ourselves, okay, well, if we're trying to gather information on how price can be moving higher, all we're doing is we're taking the same principles and moving them down lower time frame, lower time frame, lower time frame, till we find ourselves a point at which we want to execute. Now, this wouldn't have been valid this morning for me because I would want to have traded this either within the London kill zone or within the New York AM or PM kill zones. But what you could do if this was within a kill zone is you move to a lower time frame. And again, I know that it might be getting a little bit dicey to take this down as low as... no, the 3 minutes still relatively clean, right? So again, we can see we had the gap here with the wicks. So where is price delivering from? Yeah. Now the wicks overlay this, so we've got some balance to it. But you see the gap? Yeah, in here. Or you're looking at your order blocks as well. So your down close candles. Now, for high probability order blocks, you want to see a sweep on liquidity first. Otherwise, for me, I'm using them more as mitigation, right? So now I'm building a story in my head and I'm saying to myself, right, price is coming down here. We want to see this hold. We can see the bodies respect this. We don't get any closes below that, right? Price then drills down into this. Then we're looking for expansion. We see we get the fair value gap here again, right? And then ultimately what we would do, or a more basic type of system, would be looking for this, meaning that we're now showing price wants higher. We've moved up. We then look for these gaps for entries. And then we want to just find somewhere that we can ultimately balance our risk below. Again, like I said, as much as I think that this could be pushing up to take out, this is very, very tricky on this one on the low time frames at the moment because we've taken liquidity here. What I would say is if we were trying to trade this and we wanted conviction that this was going to move higher, then ultimately this is what I'd be looking for. This bearish fair value, which I'll do in red at the moment, is rejecting price, right? So while it continues to do this, we have to be expecting price to move lower. What we would need to see is a bullish close above here, in which case then we could say, okay, well, price is almost certainly making its move for this high here on the lower time frame, and then we could target this higher time frame high up here. If we just move back out to our 4-hour chart at the moment, we can see that price is kind of delivering bullish, but I would just be cautious here. We've had this kind of big expanse higher. If we take this out and we use this as our premium and discount range, okay, meaning that this is the expansion leg from the low to the high, current expansion leg. If it moves higher, then we have to move higher with it until you obviously take liquidity, which we've done here. So, in truth, you would want to see a corrective move. Let me just do that in green. To look for long setups from down in this green box down here, right? It's just the bottom 50% of a range, yeah? Whack! Hello, mate. Good to see you. Do you have a nice Christmas? So that's what I'd be waiting for at the moment. It's just dangerous to long this here, right? Let me clean this up a little bit. Right, it's dangerous to long this here because we're facing rejection off of this high, right? So we can see there, price has had an initial rejection. We can see when we got that internal rejection here as well, price came down to rebalance. Yeah, when we're down here on the hourly, price rebalance this fair value gap, right? Now price is moving higher. One thing I would say, if you're a slightly higher time frame trader that you could look for here, is to look for this to hold. Because one thing that we want to see, if we're bullish, like we are here, we want to see these down close candles supporting price. Right? So as price moves away from this, retests it here, moves higher. We set this, yeah? So the down close candle, which becomes a bullish order block once it's closed above. Now we haven't seen this retested, right? So we would want to, if this had come down lower, ultimately the fair value gap held it. But if it had come down lower into here, we still would have looked for long setups in here if we'd got our trigger on the lower time frame. So now, if we remove a few of these bits just to clear it up, then what we can say to ourselves is, okay, well, we're bullish while this holds. So we see price draw down into here, move higher. Now, what we would want to see here, however, on the lower time frame is something like this. A low to be set, that low to be swept, a shift in structure with a retrace to tell us we're going higher. So in here we get the sweep. So we've engaged the stops there. Here we have the break or shift in market structure. So we'll do that as our MSS. And then we would either be looking to enter on that actual break there, or we'd be looking for a fair value gap in here, which I'll do in green again. You'll see them on my charts as grey if you ever see my charts on YouTube or Twitter or around the nest. But ultimately, that would be how we would look to enter on this. Right, now remembering that this is a low time frame, right? So this would be something like a 5 minute or maybe even lower. So when we go up, we'd be looking for that to hold. Now, if we close below this, right, then all of a sudden we can see that as a sign of weakness. So on here, we can then be looking for short setups, in which case we would be looking for the opposite of what we have there. So we would be looking for a high to be set, that high to be swept, yeah, the low that takes the high to be broken, price to retrace in. And this helps just give us confirmation, right? So We've swept a high. Why is that important? Because it shows us that price is willing to make a move, right? It's generated liquidity to fuel a move lower. This is our market structure shift, but bearish. So we see the move wanting lower, meaning that we can either draw that across, that can be our entry there, or ultimately we're looking for a fair value gap in this leg here, which we'll do in red to show that it's bearish. So this is how we can go to the charts, and we can use our high time frame to frame where we expect price to have a reaction. We can then move on to the lower time frames, and look, there's multiple different entry methods you can have. You can have market structure shifts, breaks, retracements. You can use close above. You can use breakouts. You can use breakers for your entries as well, right? You can use fair value gap retracements. You can use structure shift lines. You can use inverse fair value gaps, right? The triggers aren't necessarily as important. What's important is that you have the consistency of using the same one while you test. Otherwise, what you'll do is you'll move back and you'll look to test across different assets, and you'll say to yourself, oh, okay, well, I can see what happened here. I would have taken the breaker, when actually you might not have done, or probably wouldn't have done. So what I would say is pick one particular entry method. Like if this one looks good to you, yeah, then use this one, right? If, for example, the inverse fair value gap method looks good to you, so if I show you something on a 5 minute, so if we go to our kind of key trading sessions, right, so we've got our New York PM here, New York AM here, and this is actually a little bit tricky. I probably wouldn't recommend using because basically it's a relatively illiquid asset, right, which is why we see all of this gapping, right? If we move this to, say, a different one, I don't know if anybody's got any suggestions for maybe something we could look over. Maybe Litecoin. I know I've heard a lot of people talking about Litecoin. We've been looking at this to make a little bit of a later move. I know we haven't really covered Litecoin a lot on this, have we? So why don't we take a little look at this and see if we've got some kind of top down here. When's the last time? Let's have a look. Keifi, is it Keifi? Sorry if I completely murdered your name there. Keifi, ADA weekly and daily. We can do that. Weekly and daily. And then, smart decks. Okay, well, this is a really good suggestion here from Eric, actually. So let's take a look at ADA, and then we'll just take a look at smart decks as well. Now, the interesting thing here, is that we've got something that's hit an all-time high, right? So the key thing about that is when something's in price discovery, that can be really, really interesting to pick targets, right? So we can use anything like, Fibonacci extensions, or I prefer to use standard deviations. So that'll be a really good way we can kind of look over that. So let's take a look at ADA first of all, shall we? And, oh, good. Apologies if I murdered it. Typical British pronunciation of other languages, which we're just utterly terrible at, which kills me, actually, because I've got a lot of family abroad and they're all multilingual and just make me feel like an absolute dinosaur. So ADA, let's have a look. So ADA, the interest here was on the weekly and on the daily, right? So let's have a look. Manual labour. That's some COQ in you. Not the way my bread is buttered, unfortunately, mate. I would love to have the best of both worlds, but unfortunately I was not blessed with that. So, okay, let's start with our weekly then. Let's just turn replay off for a moment. So the first thing I'm looking at here, right, is, let's just get rid of, well, it's not really going to bother us down there, is it? I don't think. Right, so the first thing I'm looking at, as I said, is where's price delivering from, right? So price, as we look, we take the high and we say, okay, where's the reaction been? So there's two things that immediately jump out. One is this, and we haven't taken that yet. So it makes me feel like that's probably where price is reaching for. And then we have our bearish fair value gap, right? That's our fair value gap weekly. I'm going to go back to just doing these in grey, guys, right? Because you'll understand the concept, right? Marto scan. Hey, anybody watching this on X? I don't know, guys. I think probably. I would think so. Viewing number wise, I think we've probably got quite a few people watching this on Twitter. Are there any issues, buddy, with the stream? So let's just lock that up and give Marta Scan a little moment to get back on that one, just in case we're having any transmission issues. So this bearish fair value gap, look, we left this gap, price came, it hasn't been filled, right? We've seen the rejection here, price has sold off. So now, while price is engaging with this, the expectation is on a weekly scale, of course. Yeah, oh, good, mate. On a weekly scale, is that to be bullish, then we want to see this close above, right? Now, if we get this nice close above, don't just doodle all over the charts. And I'm then looking left and saying, like, okay, where's the next likely point the price is going to go to? You can see this has been rebalanced. We've got this fair value gap here. Actually, this really interests me here, right? Because we were looking at this to offer support, right, as price came up. So price came down here, we set this bullish fair value gap. Now, the expectation was when price draws into this is we're looking for price to have a bullish reaction in here, similar to how we had when we were looking at our previous diagrams, right? But we closed below it here, and we closed below it here. So then, remember what I said before, our attention then turns to the obvious liquidity resting below the prior swing low in this case, right? So price closed here, no fair value gap, so it's not delivering from anything bullish. Price is now most likely hunting for this low, right? So now with this, if we continue to see rejection here, then in my mind, I'm thinking, okay, well, where's price likely targeting? And we have this fair value gap here, right? So we'll label this one up again just to show as we go on this, and then we can look to kind of decant this down. So ultimately, do I want to be running into long positions here? Absolutely not. You know, in traditional sense of how people would look at this, this is a point of resistance. Does it mean that price can't run from here and shoot for the moon? It absolutely can, right? But what we want to do is give ourselves just a slightly better set of criteria. Now we can see as we drop down to the daily here, right? We can see how price is holding. And actually the price action here is actually very, very balanced. I'm looking at the moment and saying, okay, where's price delivering from? And it's really, really difficult on a daily scale because price has swept this low, right? So swing low because it's flanked by two higher lows. So we've induced liquidity there. So then we can say, okay, in terms of upside targets, we've got this swing high here and this swing high here, right? We can see price engaged with this and then drew down and found support within this bullish fair value gap, right? Ultimately, price has then continued to find support here and move up, but it's looking here and it's starting to consolidate, right? So we don't know at the moment how price is going to make this move. So on a daily time frame, right? Now, I know people will be using this for different kind of information in terms of looking at it. People will be looking to invest. People will be looking to hold. For me, looking at this as how I can kind of trade this on an intraday basis, I haven't really got anything too clean to work with here. So what I would do here is I would then look and I would move down to the next time frame. And I want to find something on the highest time frame that I can that gives me an indication that price is looking to do either something bullish or something bearish, right? And yeah, market scale looks like daily is forming a daily triangle. Yeah, so like a bull flag, right? So just to show people about that. It's not really, I'm not really big with pattern trading, right? But I know Burb is exceptionally good with it as well, as is like Axel, Kaibar. And this is actually really, really clean, right? So if we just do those slightly thicker and have them stand out in a clearer color. Yeah. This is what Marta scan is. Martox and Martoxan. There we go. That's a lot better than whatever I was just calling you. Apologies, mate. So we can see the triangle right now. Typically, if you're drawing patterns, if it is something that you use, then The best way I've always been taught consistently is to have it anchored. Marto, well done, mate. Thank you, lifesaver. Is to have it anchored to a wick, right? Then you want it to ideally run the wick, the end of another wick, and then from there you've got basically two key anchor points. Either that, or you can run it, but you don't want to violate the bodies, right? What I mean by that is if we take our first point here, yeah, where we're anchored to, and then we're looking over here, it's fine to put it through the bodies, but fine to put it up to the bodies, but you don't want to violate them, yeah? And again, this is much more of a thing that comes down to preference, but in terms of the meaning of a bull flag, and a bull flag, contrary to what you'll hear some idiots on Twitter and CT talking about, is your bull flags are like your downwards facing flags, right? This is like a triangle, which is also bullish as well, right? So we've got this. And the whole point is what this is depicting is just a point of compression. So price is now compressing in here before it looks to make its next move. And that's where we get that nice explosive price action from. So, okay, Kafi, you're holding on 88 on a weekly. Okay, perfect. So in terms of just your kind of higher time frame outlook here, yeah, exactly that. I think this is where it's kind of delivering from at the moment. I think if we close above this, I'd expect price to reach for up here. I mean, everything is very bullish at the moment, right? So I think if you're in from lower down, this is a pretty safe bet. On a weekly scale, I'd look for this to hold. Right, so that's our weekly. That's our weekly OB only if this closes above it. Yeah. So if this closes above it, then this area should act as support, right? What makes this quite tricky, right, is if this closes below this order block, I wouldn't necessarily invalidate the bullish thesis behind it because price could come down below this, find support in here before looking to move higher. So in terms of your conviction, I think if you're in from lower down, I think you've got a decent entry on that. I think you've got two key areas to watch here on the weekly. You just want to see this area kind of cement support, and then I think it can kind of move higher from there. Right, now, Smart Dex. Let's have a look. Was that down here? Here we go. I mean, it's a little bit of a toss-up between the two, isn't it? I think between that. I'm going to move this to a daily guide. So we're now just going to take a look at Smart Dex. So Erica's brought this one up, and this is a really, really interesting one to bring up, right? And I'll tell you as for why. Because it's in the price discovery. So let's just mark out, shall we, where it's had this happen previously. And then we can sit and we can look and we can wait for our reactions, right? So all of these black lines represent the prior all-time highs, right? Now, whenever price moves into price discovery, it's really, really tricky because we can't, finding targets higher up. But look, when price was down here, we've got all these swing highs that we can target, right? All of these. Price was down there, you target that one, that one, that one, that one, right? Because as you draw them across, you can see when price engages with them, right? However, when price is up in uncharted territory, then what do? It's really, really, really difficult then to kind of project. So one thing you can use standard deviations. Now, I'd probably be using that on a slightly lower time frame than this, but you can use it on any time frame. What you're looking for is what's known as the manipulation leg. So you want to, let me just zoom in so you can see it a bit clearer. You want a key higher, yeah, that moves and sweeps liquidity below a low. So this is the low. Do it in a different color. We can also sweep, we see that we swept this low as well here, right? Now, what we're looking for here is we're saying, okay, where's the high that swept that low? And it's here, yeah? So this is the last swing high before price swept that low. So what we want to do is we want to just take our Fibonacci and we're now saying to ourselves, okay, well, that high to that low, that is what caused the sweep. So all I'm doing is I'm just drawing the Fibonacci from that low up to that high. And then I'm going to go on my standard deviation, which is here. Now, in terms of what you're looking at for your settings, I've got the 0, the 0.5, the 1, the 2.5, the 2, and the 4, right? So these are the ideas that when we're looking at these for targets, this is how you can help yourself get targets with price discovery, right? So when we had this high here, for example, see how that overlays with the 2 standard deviations. So when you were looking for targets within here, you would naturally, or I would naturally target this higher as resting liquidity. Also the fact that we've got relative equal highs here. And not to digress too much, but the other thing that I like about them, bearing in mind they're relative equal, is how often you see this when you get a strong close above, and you'll hear me use that term, a strong close above displacement, right? It's important. Our price then comes back down and uses this area as support before it's moving up to other targets, which is in contrast to when you see price, for example, like this, when price takes this low, we get no close above, you see price getting bought up, you see the absorption, and ultimately price pops higher. So as we're looking at this now, let's kind of get a trade plan in our mind. On a daily time frame, we haven't really got tons to work with here. I'm going to get rid of that for a moment, and I'm going to move down to our 4 hour. The reason I say we haven't got tons to work with on the daily is because we would need to wait for the current daily candle to close before we could confirm the fair value gap, which is where price would look to draw back into and where we would look for our bullish setups. So on the 4 hour, however, we have something pre-made. We've got this fair value gap down here, which if price is going to move lower, this is the natural area for that to move towards. We've taken a higher, which we can see here if we draw this across a little bit more. So if we take this higher, we've taken external liquidity. It's natural to expect price to withdraw and find support at internal liquidity, which is our fair value gap here. Now, as we all know, crypto can run really, really hot, meaning that it doesn't have to do anything that we think, but we always need to overlay a set of rules and principles and triggers on our strategy that allow us for it to be repeatable. So as we saw with this move here, price came up, we took this high, this high, this high, you can take the pick, even this high here. External liquidity has been taken, price then moves down to rebalance internal liquidity lower before making a move to take out external liquidity, right? So price has that big move, ultimately kind of does it all in one, maybe some kind of like news event or some kind of FUD hit the market. You see these kind of like, it's not even really kind of a doji or a pin bar really. You can just see that price basically wiped out liquidity on both sides. And then it started to kind of stagger itself higher. So in terms of seeing the health of the trend, I'd really like to see something like this. And what would be even better to see in terms of looking at this for bullish continuation is where we've got this order block, right, which for me is validated as soon as we close above it. So here. Now, I'd love to see price come back down to here, wick into this, but the body respects this order block, right? Meaning that we can see price drive into this, but ultimately it doesn't close below the OB, which is our blue box here. That would show me that the buyers that kind of stepped in here are still holding the ground, and then price is drawing into this, gets bought up really quickly, and then within here, we can look for our market structure and for price to move higher. Zana, hey, welcome. I wonder about PBX, had a cup and handle, then looked like a W on the weekly chart, but now makes no sense. Maybe you could take a look. Yeah, sure, no problem. So, Erica, if I was on this one with SmartDex, and this is a really interesting one, I'd probably be quite aggressive with this at the moment, and I'd be looking for how it's trading on, say, like a 15-minute, right? So what we can see here during London is as we came into London here, so the same kind of principles, looking for your down close candles to support price. So we can see that that's holding here. We can also see, which I really like with this move here, that this really skinny fair value gap held really, really well. Yeah. Perfect. Marto, moved here on X. Quality of streaming isn't so good. Thank you for the feedback, mate. I'll have a chat with our technical guys after that, after the show, because I know we get a lot of viewers on that, so I hope it's really not disturb people too much. So again, look, just if you really want to kind of get your head into price action and how it kind of moves. The key question you're asking yourself is where's price delivering from and where's it reaching for? So we see we've got a high time frame level of support here. Now, within our London session today, there was no reason to be short. Our liquidity target on the high time frame is here, yeah? And we can see as we stepped in at 7 a.m., price is holding this fair value gap and holding this order block, right? Meaning that when price dives into here, and again, it may be a little bit too illiquid. Yeah, probably a little bit too much so. But we see where price dives into here. And just look at this, just in terms of this, just really quickly again. I know I bang on about this a lot, and I know you guys just must get sick of it. But price is delivering on this time frame from this big bullish fair value gap, right? So what can we use as a trigger to go long? Well, we can use this. We want to see strength become weakness and weakness become strength, depending on what way we're trading. This bearish fair value gap should be rejecting price. So a close above it is an indication of strength, right? We've got our pre-made liquidity target up there. We're delivering from our bullish fair value gap, which I'll just pop in green because I know we've got a lot of stuff on the chart. We're holding this higher time frame fair value gap and this order block. You see how we've got like 3-4 bullish things there. So what we can do is wait for a bearish one to fail, meaning that we wait for price to close above that. We put our stop loss under the price swing low and we target the highs. All right. So in terms of that today, I think I'd probably just, if I'm ever really a little bit uncertain on price action, and we are starting to get that move higher now, which is really cool, but I would just look at the 15-minute and I'd be saying to myself, right, okay, when's the 15-minute really starting to fail us? Yeah. And again, doing it where it's within a kill zone for me, which makes it a lot more high probability. So I hope that's been helpful, Erica. Like I say, really, really tricky with these, but I'd just be looking for these down close candles. And again, I'd put a lot of weight on the hourly for this, right? So if I just, we don't need that anymore, do we? Let me just delete all of that. When you're trending strong, a really, really good thing to watch for, as I said before, right, is waiting and making sure that these down close candles are supporting price. So when we set this down close candle, validated when we closed above it here, when price drove into here, that was your triggers to look for long setups, right? Same when we validated this order block, price closed above it here. So when we drew into it in London today, that was our cue for long setups. Here's the next order block that's just been validated with the close here. So when price in hindsight drew into this, if we were within an order block, that's when, if we were within a kill zone, sorry, that's when we would have looked to go higher. All right. Awesome. I'm glad that was happening. So PBX for our friend Zana. Let's have a look. Let's have a look. We'll go on the, let's have a look at this one. Right, so our friend Zana said, what about PBX? Had a cup and handle, then looked like a W on the weekly, but now it makes no sense. Maybe we can take a look. Yeah, absolutely. Let's take a look here, shall we? Ping that onto full screen. I know we probably won't have tons and tons of data on these lower caps, although actually, no, this has got loads. This has got loads. So, again, I don't trade traditional market patterns, but what I would say is this very much looks like a head and shoulders if you are that type of trader, right? If I just remove that for a second, you can see how that pattern represents that. And then on the break of this neckline, which is this here, is then normally when you're looking to kind of short that lower. So we did have the head and shoulders breakdown. I think looking at this now, on a daily scale, we were finding support at this. So I'd be cautious of the fact we've closed below this now. This is very balanced down here. So I would say on a daily scale, the next resting liquidity lower is here, down at 0.00. And it's funny how these things are often round numbers, right? 0.00133300, okay? So on a daily scale, it's that. I think really we're kind of going to get a little bit more information here on the 4 hour. Yeah, so we violated this here. So at the moment, we need the market if this has now become an inversion, right? Meaning that this is an inverse fair value gap, meaning we're looking at this now on a daily scale as resistance, right? So up here, I want to take a look at where price is going to give me an indication that we could get some kind of violation. And actually, we can see if we look here, we've got this fair value gap. Now, we haven't closed above it yet, so it has to be grey. So if we do close above this, then next resting liquidity I'd be targeting on this time frame would be up here. And then ultimately these here, which is quite nice as well, because if we are going to see a rejection here, we can see we've got this bearish fair value gap that's been suppressing price. So price could easily be looking to come up here to induce long setups, right? For people that are looking to maybe hold this slightly longer, could come up here, take this liquidity, get into this bearish fair value gap, and ultimately break down lower to our target, which is down here. So again, if it really doesn't kind of jump out and scream at you, then what you want to do is start to move down the time frames and take it on a kind of intraday basis, right? So again, we can see here in London, we kind of swept a low. We've had this big expansion higher. Looking at this inversion here, right, we closed above it here into these highs. So price on the hourly is showing us a little bit of bullish intent. However, remember what we're asking ourselves in terms of the question of where is price delivering from. Currently, price is delivering from this bearish fair value gap. Now, we're outside of our kill zone, but how we would kind of look to interpret that data is we would move it down to a lower time frame. We're not within a kill zone at the moment, unfortunately. So what we would want to see is we have our inversion, we have the close below. We'd want to see for lower prices, price coming back, so it's delivering from a bearish fair value gap, and then we could look to target prices lower down. All right. But for now, this makes sense to me. We're delivering from a bearish FVG. We can see that we're in this large point of rejection here because, look, ultimately our higher time frame is king, right? So as we see it on here, we can see this, which acted as support, up, support again. We've now closed below it. Yes, this could be incorrect, right? Price could reclaim this. And actually, if we close back above this here, I'd be expecting for that to push up higher. But ultimately, at the moment, this is keeping price rejected, right? So I would be favouring looking for short setups on this. I would probably use, say, like a 4 hour as the real kind of barometer here. I would say you just want to be seeing real kind of bullish intent here. So if you're somebody that likes to rely on market structure as well, kind of taking out those highs here. So price may be pushing up to here, leaving a fair value gap here that we can fill. That would be a really, really good indication that price has kind of flipped that and is then looking for a little bit of strength. And Marto, volume's very low to look at such a low time frame, I guess. Yeah, so no, you're right. But you can definitely you can obviously look at volume as well. I'm not somebody that uses volume a lot, but what I do use volume for is I look for these abnormal spikes. Often when you see these abnormal spikes in volume, move that across. Right. Then it doesn't matter for me whether it's bearish or bullish. What I'm looking for, when you see these abnormal spikes, so these, just focusing on these four here, then what I'm looking for is, okay, that's had a really big run up there. Then we're on here, looking across from there. We can see we get a rejection. Price comes back down. Where's our next one? Here, do we take out a low? We absolutely do. We can then see price moves higher, right? So same with this one. We come into this, what do we get? We do take a high. We take this high. We also take this higher. But ultimately, we don't see price break down. What does it do? It holds this fair value gap here, right? And then pushes higher. And then as we see this one here, do we have any lows? We don't. So what do we ask ourselves? Always ask ourselves where price is delivering from, right? And we can see here that price is holding these, right? So then again, when price comes back up to here, another abnormal volume spike, we can see that. We say, okay, what's price doing? Is price finding support here or is it rejecting? Once again, we can see that this is actually just a corrective move, so we can hunt for long positions there. So that's just Marto discussing about how we can kind of apply volume to the charts, but he's right as well, because it's one of those things that obviously it's all very time frame dependent as well. Govin, can you do some TA on SATs, please? Yeah, sure. I think PBX was one we looked at, didn't we? We looked at ADA as well. I think they were the last ones that anyone asked. Let's finish up on that for you, mate, shall we? SATs. Oh. Let's have a look. Are you looking at this on a perpetual contract, mate, or are you looking at this more from a spot perspective? Well, no, it's a good time to buy. Just got exposed to BRC. Oh, okay. So you'll be looking at this more as a spot perspective as well, right? What I would say is, right, and I'm not saying that you're not, right, but I would say whenever you're kind of approaching this, make sure you kind of got an understanding of your key levels, where you're happy to be a buyer, where you want to be a seller. Because in terms of like a spot investment or looking to build something towards a portfolio or get exposure to it, then it's slightly different to looking to kind of intraday trade these kind of assets, right? So let's take a look at what have we got it on. Let's take a look at it on. Let's have a look at the OKX chart. Why not? You're kind enough to take me to the Champions League semi-final, so give out a shout to Raheem and his boys. Right, so looking at this before, obviously we've not got a lot of data on this at the moment. For me, this is kind of the key interest here on the 4 hour. So prices come back down into this, and we would expect to see a bullish reaction, right? Now, we can kind of see here, actually, you could use this as a kind of bit of a line in the sand. You would want to see this hold, looking for higher prices, because this is our down close candle before price closed above it. Ultimately, we are looking here at an order block. So we would look for this to support price. So what you would want to see from this is price drawing down into this, holding this, and then ultimately moving higher. If I was looking at this in terms of more of an investment perspective, then I'd always be saying to myself that I'd be happy to kind of dollar cost average in at these kind of levels, right? So you need to kind of do a bit of research on the project. You need to always be applying kind of fundamental analysis whenever you're doing any kind of investment or spot investment to understand it. But then if I was happy with what the team was doing, I was happy with the market cap, market exposure, how the tokens are distributed, then I'd be looking at things like this. And I would have been a buyer here for sure, right, in the fair value gap. I would be a buyer here again in the fair value gap as long as the fundamentals lined up for me. If this holds, sure, again, this could end up being a good buying opportunity. Depends on what your kind of holding time frame is. But what I would want to see here is just by moving down onto this time frame. This is a really great example of how we can use the time frames together, right? So we've got the higher time frame order block here, holding price. Let me just delete that for a second. Now we've got a ready-made kind of set of instructions to say how we can enter this market. Because if this higher time frame order block is going to hold, and then this, and let me just actually do that in grey so that right, and this, which is our bullish fair value gap here, now we've got a bearish fair value gap above us. Well, if I wanted to day trade this, or I wanted to look to kind of add to a bit of a position for price to move higher, because we've got these untapped highs over here. We can see these as we move all the way up the chart. There's liquidity resting above all of these. Right, that's been swept, but that hasn't, that hasn't, that hasn't, and that hasn't. Right, so price could easily look to hold those. But what you would want to see is if price came up and we closed above here, yeah, then you could look to take a position. You could be super aggressive and move your stop loss to entry when you get there. So let's say that was our close above. Let's say price sets the swing low there. As long as this gives us a 1, yeah. So we would need that to be closing here. As long as we get our 1-to-1 risk to reward here, we can move our stop loss to entry and de-risk in terms of how we would approach it on a day trading time frame. If you're looking at this for an investment, my friend, then I would be looking at this and I'd be saying, I want to see price show some strength here. And that can be in the form of candles as well, right? So when you see the candles come into this area, what you typically want to see is a decent sized body. Doesn't have to be massive. But what you really want to see is kind of like a decent wick. Yeah? Because the wick is showing you that the absorption is taking place, right? That the buyers are stepping in, buying it up, and you've got a nice bullish candle like this. That's the kind of thing that can help you have the conviction. At the moment, price is kind of coming down into here, but it could easily be consolidating before a leg higher. But in terms of dollar cost averaging into this, I'd be looking a little bit lower down round to kind of probably about here to get back into my position. And then just ultimately accepting that any money you're kind of investing in these markets, you have to be willing to lose. You can't afford to do it with any cash that you're reliant on. Just don't put yourself and your family or anybody that depends on you to that exposure. If you can grow $100 into $500, then you can grow 1,000 into 5,000, 5,000 into 500 to 50,000, right? There's no point just throwing loads of money at the market, losing loads of money, and then putting yourself in trouble. You should just be doing these with like $10, $20 accounts, right? And just seeing how high you can grow them. I think that's it for me for today, guys. I hope it's been an interesting session and not too convoluted. Got to look at a few different assets today. You're very welcome, Govin. Thanks a lot. DCA is the key. You explained so well. Just subscribe. Oh, brilliant, mate. Thank you very much. Yeah, always more than happy to help. Thank you for the great question. Thank you for being polite as well and asking. That's always mostly appreciated. But yeah, I'm going to leave you there, guys, just so that we don't kind of wear you out too much. We've just trickled over an hour there. So hopefully there's been something of use in there for you. Obviously, we're not going to be live next Monday because we've got New Year's Day, but we are going to be live again on Wednesday. If you've got any requests on there for anything with the alts or that, please do let me know. Also, guys, make sure to keep an eye on Twitter today. We've got the 6th anniversary of the Bird Nest, so you can see in the description we're giving away loads of amazing stuff, loads of goodies, prizes, indicators, access to ENC, paid courses, loads of stuff, right? There's just going to be really, really great kind of kick-off and days of celebrations now, so keep that in there. You normally just need to like and share a tweet, and then you're in with a chance to win. One of our guys just won a PlayStation 5. Someone won a year-long membership. 4 people now have won like free access to the Burbicator Pro for a year, which is the really famous strategy Burb's been making all of his money with. So keep an eye on that, guys. And if you are interested at all in what we do, you can find the information down in the description. All right, guys. Been awesome to see you. Lovely, Kelly, which has been amazing. Kim, thank you for the little jump in at the end there. Just renamed BBC. Brilliant. Erica, love you to bits, guys. Kelly, wonderful to see you. And the Trader Mum Joe as well. Like I say, Kim, Govin, thank you. HC470, thanks for popping on at the end. Marto, absolutely brilliant to see you on there. Makash, sorry, mate, I missed your hi there. Hello, back to you. Zana as well, thank you. Kaifi. Who else we had there? Manuel, who popped in too. Amin as well, who was popping in earlier. Thank you for the great questions. Our lovely Whack, Generational, Grandmaster Pikachu, which is a brilliant name. And anybody else, apologies if I did miss you. Didn't see Nit on here today, but hopefully he's well. Have a fantastic day, guys. Have a great week. Have a fantastic new year. And what I would say is with the new year coming round, I'm quite a fan of New Year's resolutions, actually. But what I would say is just kind of sit down. One of the best things I was ever taught by a trading psychologist that I work with, and he just said, look, sit down at the beginning of every new year, the end of the old, and work out what it is you want to achieve. Set yourself realistic goals, and you'll be amazed what you can achieve if you work towards them in a structured and controlled way. All right, guys. Seeky Not as well. Oh my God, I haven't seen you on there in ages. I haven't murdered your name in ages as well. So really brilliant to see you on there, mate. I hope you've been keeping well. Look, everyone, have a fantastic week. Be good, trade safe. Remember, we haven't got any red folder news now until January the 2nd, so you can expect slightly lower volatility. And just remember to be careful out there. All right. Have a fantastic week and a wonderful new year. And I will see you in 2024.